So guys, welcome back to my channel at Forex Runners, whereby we are still looking at our first chapter, what is Forex. Excuse me, what is Forex, and we on our third theme or subtopic. So we are going to look at buying and selling currency pairs. So in this case, as I said, I'm not going to read each and everything, so let me apply this.
What is Forex trading? Forex trading is the simultaneous buying of one currency and selling of another. Currencies are traded through a Forex broker or CFD provider and are traded in pairs. Currencies are quoted in relation to another currency.
So in this case,
for example, the euro
in this case, the CDF provider, so in the CDF in full is called contract for differences. So in this case, you need to, as I said, you're not the one who goes into the market directly to trade. So you as a retail trader, you need a broker to start selling currencies or buying currencies. In this case, you only need a broker when you're doing it online. You need a broker. So a broker is in between you and the market. So the broker is in between you and the market. So
for example, the euro and the US dollar, EUR, USD, or the British pound and the Japanese yen, GBP. When you trade in the Forex market, you buy or sell in currency pairs. Imagine each currency pair constantly in a tug of war, with each currency on its own side of the rope. An exchange rate is the relative price of two currencies from two different countries. Exchange rates fluctuate based.
So in this case, an exchange rate is the one I was telling you about. Maybe let me assume the USD card. So the USD card, its exchange rate might be 1 to 1.2. Let me see, USD card. Let me say 1 to 0, 1 to 1.02 something. Let's assume it like that. So that's an exchange rate. So that means every dollar is equivalent to 1.02 USD Canadian dollars. So that's an exchange rate. Yes. So for an exchange
rates fluctuate based on which currency is stronger at the moment.
It can change.
There are three categories of currency pairs. 1. The majors. 2. The crosses. 3. The exotics.
Yes.
The major currency pairs always include the US dollar. Cross-currency pairs do not include the US dollar. Crosses that involve any of the major currencies are also known as minors. Exotic currency pairs consist of one major currency and one currency from an emerging market, M. Major currency pairs. The currency pairs listed below.
So, excuse me.
The currency pairs listed below
So they have just said we have three types of currencies. So of pairs, sorry. So we have the majors or the major currency pairs, and we have the crosses, and then we have the exotic ones. So the major currency pairs always, you see, always it is it is indebted. So always include the US dollar. So if anything that includes GBP, USD, Euro USD, that's a major currency pair. So for a cross currency pair, they do not include the US dollar. So in this case, we are going to call them the minors. They are crosses. So there used to be a time whereby, in order to get to GBP JPY, you had to first convert each and every currency to USD, and then from the US dollar to any currency that you want, any currency of your choice. But then now it changed, so they created the minor pairs. So you can do without the US dollar. So these are called the minor pairs. So the exotic ones are the currency pairs that consist of one major currency and one currency from an emerging market. So emerging market, these are still developing markets. So we are going to look at the examples of the Brazil, Turkey. We're going to look at them. Excuse me.
The currency pairs listed below are considered the majors. These pairs all contain the US dollar, USD, on one side and are the most frequently traded. While there are 8 major currencies, there are only 7 major currency pairs. Compared to the crosses and exotics, the price moves more frequently with the majors, which provides more trading opportunities. Currency pair countries FX Geek Speak. EUR, USD Eurozone, United States, Eurodollar, USD, JPY United States, Japan, Dollar Yen, GBP, USD
United Kingdom, United States, Pound Dollar.
Switzerland, Dollar Swissy, USD, CAD United States, Canada, Dollar Loonie, AUD, USD Australia,
United States, Aussie Dollar.
The majors are the most liquid in the world.
Yes. The majors are the most liquid in the world.
Liquidity is used to describe the level of activity in the financial market.
As for me, I normally call it volatility.
In Forex,
so the more the way markets move volatile, it is when it is so volatile, it is the same as liquidity, because the market are moving. They are not stagnant in any price level, at any price level or somewhere. They are just moving up and down, so they are volatile. So I call it the majors usually have that liquidity tendency.
In Forex, it's based on the number of active traders buying and selling a specific currency pair and the volume being traded. The more frequently traded something is, the higher its liquidity. For example, more people trade the EUR-USD currency pair and at higher volumes than the AUD-USD currency pair.
Yes.
This means that EUR-USD is more liquid than AUD-USD.
More volatile.
Major cross-currency pairs or minor currency pairs. Currency pairs that include any two of the major currencies except the US dollar are known as cross-currency pairs or simply as the crosses.
Yes.
Major crosses are also known as minors. While not as frequently traded as the majors, the crosses are still pretty liquid and still provide plenty of trading opportunities.
So that's a disclaimer.
Don't confuse minor currency pairs with the 7 major currency pairs, all of which include the US dollar against one of the 6 other most liquid currencies in the world. The most actively traded crosses are derived from the 3 major non-USD currencies, EUR, JPY, and GBP.
So we're going to look at each cross.
Euro crosses. Currency pair countries FX geek speak. EUR, CHF Eurozone, Switzerland, Euro Swissy, EUR, GBP Eurozone, United Kingdom, Euro.
So guys, these are the euro crosses. In fact, these are the minor, but the euro crosses. So they are minors, they don't involve the USD, but then, yes, that's why we call them minors. So these are the euro crosses. So we see the Eurozone, Switzerland, Euro Swissy, the Euro, GBP, Eurozone, United Kingdom, Euro Pound, the Euro Card, and then Euro Rooney, then Euro Aussie, then we look at the Euro Kiwi, and then Euro Stocky, and then the Euro Noki. And then we have the yen crosses, the Euro JPY, Euro yen, or Euro Gappy, or the Gappy, sorry, the pound yen, Swiss yen, the Rooney yen. When we say the Rooney yen, we are referring to the Canadian and Japanese yen, and then Aussie yen and Kiwi yen. Then we look at the pound crosses. The pound crosses, we have pound Swissy, the pound Aussie. Guys, you need to understand these things. You need to first get these abbreviations into your head, and then you will try to figure it out. So when you see something that it doesn't involve, it is a major, but then it doesn't involve a USD, then you will get to know that this is a minor, or yeah, this is a minor cross currency. And then other crosses, we have the Aussie Swiss, Aussie Looney, Aussie Kiwi, then Aussie Swiss, Kiwi Looney. You get to know each and everything. So the more practice you make, the more reading you make, or the more you watch this video, you will get to know these currency pairs. So we go to exotic pairs. So let me do this.
No.
Exotic
Canada.
pairs.
No. Exotic pairs are not exotic belly dancers who happen to be twins.
Yes. Just not exotic dancers.
An exotic currency is a currency from countries with developing or emerging markets.
Yes.
Exotic currency pairs are made up of one major currency paired with the currency of an emerging economy, such as Brazil, Mexico, Chile, Turkey, or Hungary. Basically, an exotic currency pair includes one major currency alongside an exotic currency. The chart below contains a few examples of exotic currency pairs. Want to take a shot at guessing what those other currency symbols stand for? Depending on your Forex broker, you may see the following exotic currency pairs, so it's good to know what they are. Keep in mind that these pairs aren't as heavily traded as the majors or crosses, so the transaction costs associated with trading these pairs are usually bigger.
So guys,
currency pair countries FX geek speak. USD, BRL.
So the whole thing with exotic pairs, they involve major currencies and then the currencies of emerging economies. So in this case, they say that emerging economies, we have Brazil, we have Hong Kong, we have Saudi Arabia, we have Singapore, we have South Africa, we have Thailand, then we have Turkey, Hungary, Russia, Poland, Chile, etc. There are very many currency pairs. So these are exotic currency pairs. They include one major currency and then another, and the quoted currency is the exotic currency. So in fact, the exotic currency pairs, we have the major currency as the base currency, and then the quoted currency, we have it as a exotic currency. So that's it, nothing else. And let's continue.
It's not unusual to see spreads that are 2 or 3 times bigger than that of EUR, USD or USD, JPY. Due to the overall lower degree of liquidity, exotic currency pairs tend to be far more sensitive.
You're not going to don't be confused about the spreads. We're going to look at the spreads, the difference between the ask and the bid. So that's a spread. They might tell you a spread and then you think, what is a spread? But then the spread, we are going to see it in the near future, which is the difference between the ask price and then the bid price. That's a spread.
Due to the overall lower degree of liquidity, exotic currency pairs tend to be far more sensitive to economic and geopolitical events. For example, a political scandal or unexpected election results can cause an exotic pair's exchange rate to swing violently. So if you want to trade exotics currency pairs, remember to factor this into your decision.
So what you're trying to tell us here is that for one who is willing to trade exotic pairs, it's a risk, because due to an overall low degree of liquidity. So if you want to trade exotic pairs, just know you might lose a lot of money. I'm not saying you're not going to trade for exotic pairs. It is your choice if you want to trade your exotic pairs, but very many forex traders just want to trade the major currency pairs, and they may be the minor currency pairs, but not exotic pairs.
For those of y'all who are really mesmerized by exotics, here's a more comprehensive list. Currency.
Excuse me. So let's take a look at more exotic pairs. So you see very many exotic currencies. If you want to trade exotic currencies, these are the currencies that you are going to trade or you're going to deal with, but I wouldn't advise you to do so, because I don't do that. I trade minors, I trade majors, I don't trade exotic. So we are going to the G10 currencies, so the great 10 currencies, and then let me activate this. You don't need to read all these exotic pairs. I hope you guys understand what exotic
BRL Brazilian Reals, TWD Taiwan. Did you know there are 180 legal currencies in the world, as recognized by the United Nations? That's a lot of potential currency pairs. Unfortunately, not all of them are readable. Forex brokers tend to offer traders up to 70 currency pairs. Aside from the three main categories of currency pairs, there are other groups of currencies that are thrown around in the FX world that you should be aware of. G10 currencies. The G10 currencies are 10 of the most heavily traded currencies in the world, which are also 10 of the world's most liquid currencies.
Most liquid.
Traders regularly buy and sell them in an open market with minimal impact on their own international exchange rates.
So, guys,
country currency name, currency code.
So these are the G10
United States dollar USD.
So we have the United States,
European Union Euro, EUR.
We have the pound, we have the yen, we have the dollar, we have the Aussie, we have krone, then the francs, yes, the Canadian dollar, and then yes, these are the 10 great currencies that we have. So you might say these are the minus the Norway, by minus the Denmark, minus the Swiss. The others are the major currencies. Yes. So we are going to look at next. We are going to look at the Scandis, those from the Scandinavia, the Swiss, the Swedish, Norway,
United Kingdom pound GBP. The Scandis. Scandinavia is a subregion in Northern Europe, with strong historical, cultural, and linguistic ties. The term Scandinavia, in local usage, covers the three kingdoms of Denmark, Norway, and Sweden. Together, their currencies are known as the Scandies.
Yes.
Back in the day, Denmark and Sweden established the Scandinavian Monetary Union to merge their currencies to a gold standard. Norway joined later. This meant that these countries now had one currency, with the same monetary value, with the exception that each of these countries minted its own coins. But then World War I happened, the gold standard was abandoned and the Scandinavian Monetary Union disbanded. These countries decided to keep the currency, even if the values were separate from one another. And this remains the state of things. If you notice their currency names, they all look similar.
Krona.
That's because the word krone or krona literally means crown, and the differences in spelling of the name represent the differences between the North Germanic languages. Crown currencies. What a cool name, huh? I don't know about you, but saying, "Hook me up with some crowns, yo," sounds way cooler than, "Hook me up with some dollars, yo."
So these are the Scandies, the Scandinavian countries, the Denmark, the Sweden, and then the Norway. The krone.
Buying and
So
SEK and NOK also have cool nicknames, Stocky and Noki. So when paired with the US dollar, USD, SEK is red, dollar Stocky, and USD, NOK is red, dollar Noki. C currencies.
CEE
C
currencies.
stands for Central and Eastern Europe. Central and Eastern Europe is a term encompassing the countries in Central Europe, the Baltics, Eastern Europe, and Southeast Europe, the Balkans. Usually meaning former communist states from the Eastern Bloc, Warsaw Pact, in Europe. Central and Eastern European countries, CEECs, is an OECD term for the group of countries comprising Albania, Bulgaria, Croatia, the Czech Republic,
Hungary, Poland,
and the three Baltic states,
Romania.
Estonia, Latvia, and Lithuania. Regarding the FX market, there are four main C currencies to be aware of.
The
Country
Hungarian
currency name currency code.
Czech Republic, Poland,
Hungary
Romania.
foreign HUF. Czech Republic koruna CZK. Poland zloty PLN. Romania leu RON. BRICS.
The BRICS.
BRICS is the acronym coined for the association of 6 major emerging national economies: Brazil, Russia, India, Indonesia, China, and South Africa. Originally the first 4 were grouped as BRIC, or the BRICS, BRICS was a term created by Goldman Sachs to name today's new high-growth emerging economies. BRICS is the term created by the OECD when it added Indonesia and South Africa. Country currency name, currency code: Brazil Real BRL, Russia Ruble RUB, India Rupee INR, Indonesia Rupiah IDR, China Yuan CNY, South Africa Rand ZAR. Summary. Phew. That was a lot of information on currencies, but you just raised your FX IQ points. Brain. Let's summarize what you've learned in a series of questions. What is a currency pair in Forex? A currency pair is a pairing of currencies where the value of one is relative to the other.
The first currency is a base currency and the second one is a quoted currency.
For example, GBP USD is the value of the British pound relative to the US dollar. What are the major currency pairs? Major currency pairs, majors, are those that include the US dollar and are the most frequently traded.
Yes.
There are 7 of them: EUR, USD, USD, JPY, GBP, USD, USD, CAD, USD.
CHF, the Swiss, AUD, USD.
What are the currency crosses? Currency crosses, are the more frequently traded currencies that do not include the US dollar in their pairing.
The minors.
Crosses include EUR, GBP, EUR, CAD, GBP, JPY, EUR, CHF, EUR. How many currency pairs exist? There are hundreds of currency pairs in existence, but not all can be traded in the FX market. The United Nations currently recognizes 180 currencies. If you were to pair each currency up with another, it's a lot.
So guys, that's it for...
Did this content help you?
So that's it for the buying and selling currency pairs. So you now understand the majors, you now understand the minors, and you now understand the exotic ones, or yes, the exotic pairs. So to go back into history, the major currency pairs, they include the US dollar. So the minors, they don't include the US dollar. And then the exotic ones, they include every major currency pair, then which is the best currency, then plus the emerging economy currency of that country. Yes. So that's where we find the China, the Brazil, all the BRICS, every group except from the majors and the minors. So that's it. So guys, thanks for watching. I will see you in my next video. So remember to subscribe and watch every lesson that I post, because you will be a better trader, and I believe you're going to be one. So thank you.